Hello, everyone, and welcome to Thursdays Live with Chug. Each week, we cover pressing topics that matter to you and your business. My name is Arianna Gonzalez, and I'm the Client Services Manager here at Chug Attorneys and CPAs. Please join me in welcoming partner and attorney Shaurya Tomar from our New Delhi affiliate office, ICUL. Hi there, Shaurya, and welcome.
Hi, Arianna. Thank you very much. I'm glad to be a part of this. I wish to provide my views on the subject.
So for today's topic, we're going to be talking all about owning, purchasing, selling, and managing immovable properties by NRIs and foreigners in India. So let's get right into it. So let's start with talking about acquisition of immovable properties. So Shaurya, who can purchase immovable properties in India, and what are the types of properties that they can purchase?
Okay, so if we talk about from the point of view of non-residents, we can say that there can be three types of individuals who can purchase properties in India, like NRIs, person of Indian origin PIO, and foreign nationals. And when we talk about foreign nationals, we can again subdivide them into two categories. Those foreign nationals of non-Indian origin who have come to India for some employment or some research or some student visa. So they can do so under general permission of foreign exchange law. But typical foreign nationals of non-resident status, and if they want to acquire a more property in India, they have to go by specific permission of RBI. So this is how, if we go ahead with the individuals who are non-residents, we can divide them into like three categories like this: NRIs, PIOs, and foreign nationals, like I explained. So, because this subject is limited to NRIs, PIOs, and foreign nationals, so there is per se no such restriction that what type of properties, immovable properties they can purchase in India. But there is certain restriction. Three types of properties are there which they cannot purchase. Like one is agricultural land, second is plantation property, and another is farmhouses. So agricultural land, we all understand that the farmland basically which is being used for farm purposes, agricultural purposes. And a lot of questions arises with respect to the plantation property, that what is typically a plantation property. So, in terms of various interpretations, a plantation property is basically a land which is used for cultivating and growing cash crops. Cash crops means tea, coffee, spices, rubber, or such similar types of crops. When we grow them on commercial scale, the property concerned is treated as a plantation property. And the third type is farmhouses. A farmhouse is basically a residential property which is built over a land or adjacent to the agricultural purposes. A farm. This is basically used by farmers and farm workers and is often associated with agricultural activities. So apart from, like I explained, agricultural land, plantation property, and farmhouses, NRIs, PIOs, and foreign nationals can purchase uh, all other types of immovable properties in India with general or specific permissions of RBI.
Those are some great insights, Shaurya. Let's get into the next question. Can you talk about the difference between an NRI, a PIO, and an OCI?
Okay, that's a very interesting one because generally we use these terms interchangeably, that NRIs are PIOs and all that thing. So I'll just explain you the a very fine line between all these three. So NRI, a non-resident Indian, is basically an Indian citizen who is residing outside India, but he holds an Indian passport only. Whereas a person of Indian origin is a person who was an Indian or his ancestors were Indian, but right now he is a foreign citizen. He holds a foreign passport, but he has applied because of his descendants. He has become a person of Indian origin. And when a PIO holder or someone else applies for an OCI card, that is a special scheme launched by Government of India in 2005, if some person like they apply for an OCI card, for the benefit of, because India doesn't offer dual citizenship, right? But OCI is a method where they can utilize such kind of benefit. They are permitted, once they hold that OCI card, they are permitted to live and work in India for an indefinite period. They need not to apply for a special visa or kind of this. So that's the basic fine line between an NRI, PIO, and OCI card.
There are quite a few differences there. Thank you for sharing that, Shaurya. Let's get into the next question. Is it permissible for foreign nationals of non-Indian origin to acquire immovable property in India?
Yeah, like I explained in your first question as well, when we decided to move ahead with this topic, and we divided the non-resident individuals into three categories like NRIs, PIOs, and foreign nationals who are not of Indian origin and resident outside India. So again, I would also wish to explain there are 11 countries. Basically, the bordering is the countries which are situated on the borders of India. India doesn't permit the citizens of these 11 countries to acquire immovable property in India or sell those immovable properties in India without the special permission of RBI. These countries are like Pakistan, Afghanistan, Iran, Bangladesh, Sri Lanka, China, Nepal, Bhutan, Hong Kong, Macau, and North Korea, the Democratic People's Republic of Korea. So if a citizen of these 11 countries, they want to acquire any more property in India, they have to go for a special permission from RBI, then only they can acquire. Now, all those foreign nationals who are not from these countries, again, we can put them into two separate categories, which they are the one who have become a resident in India in terms of their residential status in past financial year and their intention to stay in India. So they can do so. They can purchase the immovable property, except farmhouses, plantation properties, and agricultural land with general permission. And if they are the resident outside India, they can purchase the immovable properties in India with special permission from RBI. So this is the, again, a basic difference, a fine line that how to treat about this. But India is very friendly in allowing foreign nationals also, like people from US, US national, US citizen can also acquire property in India by way of going just a special permission from RBI. And if they are in India for an employment visa, and if they are staying for an indefinite period, they prove their intention that they would be in India for an indefinite period, then they can do so with general permission. They need not to take any special permission from RBI, and they just go ahead and purchase the property.
That's very helpful information. Just a quick disclaimer for all of those who are just joining us. We are live on YouTube, LinkedIn, and Facebook. This conversation is for informational purposes only. It does not create an attorney-client relationship. So please email us any questions you have at info@chuk.com, and we'll be happy to help you out. Let's get into the next question. So what about the procedures for NRIs? Can we talk about the procedures for NRIs and PIOs to purchase property in India?
Okay, so the procedure is very simple. Like you purchase property in US, it happens in India. But since you are dealing with a foreign territory, you are transferring the purchase consideration either from your foreign country to India, or you might be utilizing your Indian funds. So an NRI or a PIO can either transfer the sale price by way of normal banking channels. They can send the foreign exchange to the buyer's account and complete the sale transaction, or they can use their NRE, FCNR, or NRO bank account in India, and they can debit their respective account and make the purchase of the property. So that's very simple.
So Shaurya, does a foreign national who is considered a resident of India under Section 2 VIB of the Foreign Exchange Management Act require prior approval from the RBA to purchase immovable property in India? Can you talk a little bit about that?
Yeah, so basically, it is like what I was explaining earlier as well, that when a foreign national is considered to be a resident in India, and when he would not be needing a special permission from RBI to purchase the property. So here, we need to prove two things. One, that he has stayed in India for more than 182 days in the preceding year, preceding financial year. And second is that his purpose of stay in India, as well as the type of Indian visa he is holding, clearly indicates his intention to stay in India for an uncertain, indefinite period, basically for a longer period of time. So when we say longer visas for such purposes, these are like student visas, medical visas, research visa, employment visa, project visa. If people, foreign nationals are on such visas in India and their intention is to stay in India for a longer period of time, and they have stayed more than 182 days in the preceding financial year, they qualify to become resident in India, and they can purchase the property, immovable property in India under general permission of RBI. However, like I explained, any foreign nationals from those 11 countries, they in any case would be requiring RBI's special permission.
I appreciate you going into detail about that, Shaurya. So do NRIs and PIOs need to file any documents with the RBI at any stage to purchase property in India? What's your experience with that?
No, because NRIs and PIOs can purchase immovable properties under general permission from RBI. So they need not to submit any special form or any special thing with RBI or any other authority. They just need to take care of the taxation part.
Great insights, Shaurya. So let's get into inheritance. Are persons of Indian origin or non-resident Indians and foreign nationals of non-Indian origin allowed to inherit immovable property in India? What are your thoughts on that?
Yes, so that is also very clear. And even under inheritance, you can acquire such properties, you can hold such properties which you cannot buy. You can also inherit the agricultural land, you can also inherit plantation property, you can also inherit farmhouses under inheritance. So an NRI, a PIO, even a foreign national, they can inherit all such immovable properties in India from either a person resident in India or person resident outside India. It is just in the case of foreign nationals that if they are inheriting some immovable properties in India, they have to intimate RBI about the inheritance, and they are going to hold this property. That intimation and that such approval kind of a thing they have to take from RBI after such inheritance. Beyond that, there is no such specific restriction upon any person. So NRIs, PIO, and foreign residents, they can inherit properties in India, and they can hold such immovable properties in India. They can afterwards sell that property. We can discuss in the later part of this discussion.
What about the eligible individuals from whom a non-resident can inherit immovable property? Can you talk a little bit about that?
Okay, so an NRI or a PIO holder, they can inherit properties from a person resident in India or resident outside India. If they are inheriting the property resident from a person resident outside India or from a foreign national, they have to provide some evidence that the foreign national or resident or a person from whom they are inheriting, they acquired this property at the time of acquisition in terms of the travel and foreign exchange. So they have to prove this thing. Other than that, there is no such bar, except the thing that if a foreign national is acquiring any property under inheritance and to hold that property, they have to take one from RBI.
Great. Let's get into leasing immovable property in India. Is it permissible for NRIs, PIOs, or foreign nationals to hold immovable property in India on lease?
Yeah, that's also very interesting. Because when you have some properties, either by your purchase or by inheritance, you want to rent them out because this way you can manage those properties, you can maintain those properties. So yes, you can let these property out all which you have. And to your specific questions, that whether these NRIs and PIOs can have properties on lease in India, yes, they can have. NRIs and PIOs, there is no restriction as to time as well. But any foreign nationals, like if a person, a US citizen wants to have a property on lease in India, they can do so without any permission if the lease is not more than 5 years. If it is more than 5 years, then they have to take permission from us, right? So that's the only thing.
Another question on that topic, is it allowed for NRIs, PIOs, or foreign nationals to lease out residential or commercial property that has been acquired through foreign exchange or rupee funds?
Yes, I explained this thing in the first question itself, that NRIs, PIOs, they can rent out their property without any prior approval from RBI, and whatever rent they receive after paying relevant taxes, they can remit that thing outside India.
Those are some great insights, Shaurya. So another question on that topic, what are the types of accounts where rental income earned by NRIs and PIOs from properties in India can be deposited?
So typically, based on my experience, see, NRIs and PIOs can have their NRE and NRO accounts. But based on my experience and nitty-gritties involved, we always advise our client that all such Indian income should be deposited in your NRO account, because NRE account is basically for foreign income, and it is denominated basically in foreign currency. You can withdraw money in Indian currency, but it is basically your foreign income which is deposited in NRE. And so my advice to my clients is always that whatever rent or whatever Indian income you receive, it should be deposited in your NRO account. And after paying the taxes, you can transfer it to NRE, or you can transfer it directly to your US bank account or your foreign bank account. So that's not a problem.
Another question on that, what about the taxability regime surrounding rental income earned by NRIs and OCIs from immovable properties in India? Can you talk about that a little bit?
Yes, so it's like when you are earning, rental is an earning from your house property in India. And if you are earning something in India, you have to pay taxes, right? So in India, typically, if you rent out your property, whatever amount of rent you are receiving, you have to pay taxes at the rate of 30%. So basically, the lessee, the tenant, will deduct this 30% plus surcharge that would effectively come around 31.2% from your rental this thing. And this deduction would be deposited by him in the income tax department against your PAN number, and by end of the financial year, you can file your income tax return and claim that this tax is more, and you can claim some refund as well. And if you feel that your income is less in India, you can beforehand apply for a lower tax deduction certificate under Section 197 of Income Tax Act. Well, but typically speaking, you can rent out the property, but whatever rent you receive, it would be subject to tax deduction at source, which would effectively at 31.2, to be precise.
Now let's get into the transfer and sale of immovable property. Is it possible for an NRI or PIO or foreign national to sell their residential or commercial property in India?
Yes, so if you have purchased your property, you want to sell them off. If you inherited some property, you want to sell them off for a good amount of money for earning profits and all. So again, we can divide this question into three parts. NRI can sell this immovable property, his immovable property to a person resident in India, to another NRI, to a PIO person as well. A PIO can again sell his Indian property to a person resident in India, an NRI, but he can only sell to a PIO with the prior approval of RBI. But in the case of foreign nationals, when they may fall under general permission, they might have acquired the property under general permission. But all the foreign nationals, They can sell their Indian property only with the prior approval of RBI, whether they are selling it to Indian resident, whether they are selling to an NRI, whether they are selling to a PIO. Foreign nationals have to take prior permission, prior approval of RBI before selling their Indian property to anyone. That's the bottom line.
Great. Thanks for talking about how that's possible. So are NRIs, PIOs, and foreign nationals permitted to sell their agricultural land or farmhouse in India?
Yeah, so again, like I explained in the first portion of our discussion, that these are the land, agricultural land, plantation property, and farmhouse. These are not permitted to be acquired by NRIs, PIOs, and foreign nationals. They might get them under inheritance, right? So, but if you have that property under inheritance or otherwise, you can sell that property. NRIs and PIOs can sell their agricultural and property, plantation property, and farmhouses, but only to a person resident in India, because you cannot sell an agricultural property or plantation property to an NRI, because there is a restriction. NRI cannot purchase an agricultural property. And similarly, in the case if a foreign national holds some agricultural property by way of inheritance, he can do so with the permission of RBI.
I appreciate you sharing those insights. Is it possible for an NRI to sell their immovable property in India if they are unable to travel to India? What's your experience with that?
Yes, it happens with a lot of our clients and friends. They are settled. They do not have time to travel to India because there are a lot of documentation involved, a lot of time and this thing involved. So, by way of a power of attorney, we suggest our client that they can sell their property. They can give that power of attorney to one of their relatives or friends who can appear on their behalf, collect the sale consideration on their behalf in their respective account, and complete the sale transaction. But this power of attorney needs to be drafted very well, so its registrability, implication of stamp duty can be taken care of.
Can you talk about the alternative methods through which an NRI, PIO, or foreign national can transfer their immovable property in India?
Okay, so apart from selling, that when transfer involved, so we generally give two options. Like one is gift. So NRI and PIOs can also give their properties, residential commercial properties, to another resident in India, another NRI or PIO. And they can also give their agricultural and plantation property, but only to a person resident in India. They can also mortgage their properties either with Indians, some nationalized Indian banks, or maybe a party with a party abroad, and they need not to have any RBI approval in this regard. But when it comes to foreign nationals, if they want to gift their property and if they want to mortgage their property, they can only do so with the prior approval of RBI, because in the case of foreign nationals, they just cannot transfer their property without the permission of RBI. So in the case of gift as well, in the case of mortgage as well, they can do so, but they have to take prior permission from RBI.
I appreciate you going into detail about that. Let's get into taxability or transfer acquisition of immovable property. What are the tax implications for NRIs and PIOs on the sale of their immovable property in India?
Okay, so that's a very important portion of our discussion, because when NRI wish to discuss about the sale of their property, they want to know about the taxation involved, that how much tax they have to pay and all that thing. So whatever profits you earn from selling a property in India are always subject to taxation, right? And generally what happens that you are not filing your tax returns and all that. So what we need to see here while deciding the taxability of your income from the sale of the property, one is the sale price of the property, and the second one is the period of holding of that property in India. If it is more than 2 years you are holding this property, then you have to pay long-term capital gain tax. And if it is less than 2 years, then short-term capital gain tax would be there. And while paying long-term capital gain taxes, because generally people hold such properties under inheritance, or it happens in my experience, people generally hold such property for like 10 years and 15 years. So generally long-term capital gain tax would be there. And it is calculated for this thing. Government of India has devised a process that the buyer in India have to deduct TDS, like we have explained in the case of rent as well in our earlier questions. So whatever sale price would be there, in case of long-term capital gain tax, a TDS, typically we call it TDS, a TDS will have to be deducted. And it depends upon the sale price of the property. If you're selling, if an NRI is selling his property, which is worth like 50 lakhs Indian rupees, then the collective amount of TDS would be 20.8%. And if it is between 50 lakhs to 1 crore Indian rupees, then the TDS amount would be, TDS rate effective would be 22.88%. But if the property is worth more than 1 crore, if you are selling it for more than 1 crore, basically the sale price, if the sale price is more than 1 crore, then you have to pay TDS 23.92. So basically, when you are selling the property within these brackets, the buyer of your property will deduct this TDS and deposit this TDS with the income tax authorities, and it will be reflected against your PAN.
I know that was quite a big question, so I appreciate you breaking that down for us. So just to make sure we're all on the same page with this, can you talk about what's the definition of a person resident in India?
Okay, from FEMA perspective, because we are talking about immovable properties and their acquisition. So, like I explained earlier as well, we need to see two things. One, the person was residing in India for more than 182 days in the preceding financial year. Here, financial year means like starting from 1st April and ending on 31st March in the following year, right? In India, we follow this financial year, unlike US, where we follow the calendar year as a financial year. In India, we follow a 12 months starting from April 1st and ending on 31st March of the following year. So he must have stayed in the preceding financial year for more than 182 days. And secondly, he or she has to establish, based on his visa, his intention to show that he would be here in India for an indefinite period, for a longer period, like for student visa, medical visa, employment visa, like that. So if these two conditions are satisfied from FEMA perspective, the person would be treated as a resident in India.
Fantastic. Next question for you. So in what circumstances is the buyer required to deduct TDS, tax deducted at source, when purchasing property?
Okay, so like we explained, when an NRI was selling the property, the Indian buyer would be deducting the TDS. In this case, the reverse will happen. In this case, the NRI and PIOs are buying properties in India, so they will deduct TDS amount from the sale consideration to be paid to the seller. It may be a builder, it may be a developer, it may be an individual property. So NRI and PIOs have to deduct TDS and deposit this thing with the income tax department.
Interesting insights. I appreciate you sharing that. So what is the basis for calculating the amount of TDS, tax deducted at source, to be deducted?
Okay, so typically there are numerous portions, numerous guidelines, and we can say that there is a section called 195 of Income Tax Act, which governs the deduction of TDS on sale of property by NRI. So whenever someone needs very good clarity on such tax deductions, he might go through this section 195 with recent amendments, or can take help of Indian attorneys who deals in real estate and who can advise them with readily available data and how to go about it.
Great. So the deduction must be done on the amount of capital gains. I appreciate you going into that for us. So what about the NRE, NRO, and FCNR accounts? What are the various banking channels and accounts that NRIs can use to facilitate the transfer and acquisition of immovable property in India?
Yeah, that's very interesting and very practical part of the problem, because you find the property, you want to purchase it, but you don't know how to transfer the money to the buyer, because you cannot purchase property in currency notes. You cannot purchase the property by traveler's check, right? You have to send money through proper banking channel. You can send that money either from outside India through normal banking channels by inward remittance, or you can debit your NRE, NRO, or FCNRB accounts in India for the purchase of the property. Now, what are these accounts stands for? An NRE account is a typical bank account where NRIs can deposit only their foreign income, which gets converted into Indian rupee. And withdrawal from this NRE account can be made in Indian rupees only. And funds can be transferred from one NRE to another NRE or NRO account. Since in this account, you would be depositing your foreign income, the deposits in NRE account are fully repatriable, and interest earned on this account is also taxed. Similarly, there is a FCNR account. The only difference is that in this account, the currency is designated in typical currencies like US dollars, pound, euros, or something like that. And it is also fully repatriable. All the deposits lying in FCNR account, they can be repatriated outside India without any restriction. And whatever interest you earn on your FCNR account is also tax-free. Now, the third one is NRO account, which is very useful for NRIs and PIOs, and generally people have such NRO accounts for their Indian income. So in this NRO account is a typical ordinary rupee account, and you can deposit both your local income arising in India as well as your foreign income. However, denomination of all the deposits and withdrawals in this NRO account can only be in Indian rupee. And it is not fully repatriable. Whatever amount is lying in NRO account, you can only transfer USD 1 million in one financial year. From April to March, like I explained about the financial year, you can only transfer from this NRO account, from your NRO account, only USD 1 million in one financial year. And if you earn some interest in this NRO account, this is also subject to deduction at the applicable. So these are the basic difference in how you maintain your NRE, NRO, and FCNR.
I appreciate you going into the NRE account, the NRO account, and the FCNR account. I know that was quite a bit of information there. So let's talk about repatriation. Are NRIs or PIOs allowed to repatriate sale proceeds of immovable property?
Yeah, because you purchase the property, you want to earn some profits and all that thing. So yes, it is allowable. But now here we need to see that how the purchase price when you acquired this property in India was paid. So if the acquisition of that property happened through foreign exchange, you transferred money from outside India, or it was done from the from debiting your NRE or FCNR account. So you can only repatriate the same amount. It cannot be more than that from which you have purchased this property. You can only remit the amount with which you have purchased the property. If you have purchased a property for like 500,000 USD, you can remit, you can sell it for 600 USD, 600,000 USD, but you can only remit outside India 500. That's the limit. But the balance amount can be transferred into your NRO account, and which can and gradually be transferred, and gradually we can repatriate it up to USD 1 million per financial year. So this is one thing. And if you have purchased this property through your INR account, through your Indian income, or through your NRO account, then you can remit only 1 million USD per year through your NRO. So these are the restrictions. This is how you can handle it.
That's very helpful insight. So what type of accounts can be used to credit the sale proceeds from a movable property for NRIs and PIOs for foreign nationals in India?
So it's like I explained in the case of rent as well. Again, we advise our clients to have NRO accounts for such sale proceeds, for such rental income, for such pensions and all those things. And then they can earn their income and deposit this thing in NRO and can then transfer like 1 million USD per year.
Is there a limit on the number of residential properties for which sale proceeds can be repatriated by the NRIs or PIOs?
Yeah, that's also very interesting. NRIs and PIOs can only repatriate the money, sale proceeds of 2 residential properties. So we need to be very careful while holding such properties in India. If you want to hold more residential, there is no such restriction in case of commercial properties. So you can, if you have 2 residential properties in India in your name, then we would suggest that you should buy more commercial properties so that you can sell those commercial properties and remit the sale proceeds outside India. But in case of residential properties, there is a restriction of up to 2 properties. You can transfer the sale proceeds outside India. And if there are more properties, you can deposit the sale proceeds in your NRO account, and then again, you can use the limit of USD 1 million per year.
So let's get on with our last question of the day. So is it possible to repatriate the sale proceeds of an immovable property that was inherited by a foreign national who is not an NRI or PIO?
Yeah, so that's a very tricky question. Generally, it happens very less that a foreign national would be inheriting some properties in India. But if it happens, once he inherited, he has to take approval from RBI to hold this property in India. There is per se no such restriction on inheritance, but to hold such inheritance by a foreign national, you have to take approval from RBI. And now, if you want to sell this property, wherever from you belong, you may belong to these 11 countries as well. You may belong to US, UK as well. While disposing of these inherited properties, you have to take prior permission from RBI. And whatever proceeds you receive, you can repatriate them with the prior approval of RBI. So that's my take on this.
That does bring us to the end of our conversation. Thank you so much for joining us today. To stay up to date, please subscribe and follow us on Facebook, LinkedIn, and YouTube. And if this video was helpful, please make sure to give it a like and share it with your friends. If you have any questions or suggestions, please feel free to send us an email at info@chug.com and join us back here next week for more pressing topics that truly matter to you and your business. Until next time, stay safe and take care.